So we don't have any name for the organization. So I'll just call it Departmental Trading and Profit and Loss Account for the year ended 31st, yeah, 31st March 2001. Trading profit and loss account for the year ended 31st March 2001. And we also have the general profit and loss account. What we are going to put in the general profit and loss account is only that stock reserve, because all these are going to be divided. So only the stock reserve will go in the general profit and loss account. So for that, we need the general profit and loss account for the year ended 31st March 2001. Okay. So let's start. First, we have the opening stock. To opening stock. To opening stock. We have 25,000 and 50,000. Then there are purchases. Now we need to be a little careful while writing the purchases. Two purchases of X, it's 2,05,000. So that we keep the same, because X has not received anything. X has only sent. Sales of X include transfer. X has not received anything from Y. But Y has received goods worth 1,50,000. So the actual purchases would be only 1,10,000. Okay, Komal, I'll come to that question towards the end. Let's proceed with the problem. Okay, two purchases, 2,05,000. Of why I'm taking only 1,10,000, not 1,60,000, because this remaining 50,000 here I'm going to show as an interdepartmental transfer. Okay, then we have buy sales. I will write that interdepartmental, put that interdepartmental transfer as well. Buy sales. Now we need to be careful here. I'm going to put it as only 2,50,000, and here it's going to be the next one. Why it's going to be 3 lakhs. Okay. Now I'll show the interdepartmental transfer to interdepartmental transfer. Okay, now X has transferred to Y. So that means Y is the receiving department. So for Y, it's like purchases, 50,000. And this side we say buy interdepartmental transfer. Buy interdepartmental transfer. For X, it is like sales. Okay, now if you see this total comes to 1,60,000, which we have been told, and this total comes to 3 lakhs. Okay, what I've done is I've only separated it, because we cannot show interdepartmental transfers as part of sales or as part of purchases. Okay, because sales and purchases include transactions only with external parties. Interdepartmental transfers include transactions with other departments within the organization. Basically, goods remain within the organization. Only thing, they are moving from one department to another. Next, we have wages. Or you can two wages, which is already divided for us, which is 7,000 and 7,500. Then we have carriage inward. To carriage inward, 3,000 and 5,000. This side we have the closing stock. Closing stock is given to us 40,000 and 25,000. Okay. So that's, we're done with the items in the trading account. Now I will move to there'll be gross profit, gross loss. We'll come to calculate it a little later. I'll move to the profit and loss account. So now we know that all these expenses are going to be divided in the ratio of 2:1. So that's the only thing that we have to do. So to rent, rates and taxes. To rent, rates, taxes. 3,000 divided in the ratio of 2:1 will come to 2,000 and 1,000. Then we have sundry charges, 6,000. To sundry charges, 6,000. That will be, I think, 4,000 and 2,000. Then there is telephone 7,500. 7,500, which will be 5,000, 5,000, 2,500. Then there is insurance 9,000. 9,000 will be 6,000 and 3,000. And now bad debts, I will do a small calculation. Okay. You don't even need to show this, but just since it's a problem when you are studying, some of you may get confused. We have bad debts. Bad debts given to us are actually 9,000 here, but then they've told us company is going to write off further bad debts as of rupees 3,000. So 9,000 plus 3,000. So when I'm dividing bad debts, it will be 9,000 plus 3,000 total, which is equal to 12,000. Okay, by chance we were preparing the balance sheet and there were debtors given to us, we would have shown this 3,000 as new bad debts in the balance sheet. I think you all know that debtors plus debtors minus new bad debts minus new RDD in the balance sheet. Okay, I would have shown this in the balance sheet, 3,000 as bad debts in the balance sheet. But now we don't have the balance sheet, so we're just going to show one effect. So that 12,000 I have to divide. So two bad debts. 12,000 divided in the ratio of 2:1 will be 6,000 and 3,000. Then we also have advertisement 3,000. Advertisement 3,000, which will be 2,000 and 1,000. Then there is carriage outward 600. To carriage outward 600, which will be 400 and 200. And then we have discount received, discount given. So discount received becomes an income, so I take it on the credit side. By discount received, I will leave a line for the gross profit in case there is. By discount received, it is 2,700, so that divided will be 1,800 and 900. And then discount given is 1,500 for discount allowed. To discount allowed, is, or discount given 1,500. So it will be 1,005. Fine. So let's go ahead now. Now we'll just calculate before going to our stock reserve and all. We can just calculate our gross profit and net profit. So to gross profit. Okay. I think yeah, the credit is higher than the debit. So the total this side comes to 3,40,000. 3,40,000, and here we have 3,25,000. And this is the gross profit of X is 1 lakh. Gross profit of X is 1 lakh, and the gross profit of Y is 1 lakh 2,500. Okay. So two gross profit carried down. So bring down the gross profit by gross profit brought down 1 lakh and 1 lakh 2,005. We can also calculate our net profit. So this will be the total here will have be 1 lakh 1,800, 1 lakh 1,800, and here we have 1 lakh 3,400. 1 lakh 1,800 and 1 lakh 3,400. So two net profit of X, it is 73,400 and here it is 89,200. So you can say two net profit carried down and then bring down the net profit by net profit brought down. For X, it is 73,400 and for Y it is 89. Okay. Now we are not done with the problem. We have to do one very important thing, that is calculation of stock reserve. So let's just go back to the problem. Now remember, I've done two problems already like this. They have told us sales of department X include transfer to department Y at market price rupees 50,000. So it's established that X is transferring to goods to Y at market price. Okay, and then they've told us the closing stock of department Y includes goods worth rupees 9,000 transferred from department X. That means this 25,000 includes 9,000 which has come from X, and the fact that it has come from X, that means it is at market price. And what is the meaning of market price? It's cost plus profit. We need to eliminate that element of profit. Okay. Now, my next question is, what is the rate of profit? In the first problem, they'd given it to us. They said 125%. In the second problem, since they are not given it to us, second is in the previous problem that I had done, we calculated the profit. Okay, we calculated the profit. Similarly, here in this problem also it's not given. In this problem also the rate of profit is not given. So I told you the moment the rate of profit is not given, you need to calculate. Okay, so we need to prepare a working note. Rate of gross profit. And whose profit will be calculated? Always the department that is sending the goods. Always the department, sorry, not A, it is X. Rate of gross profit of X. Okay, always of the department, because we need to know at what profit they are selling. So we are not going to calculate it of Y, we are going to calculate it of X. So there is a formula for that. I hope you all know the formula. It's gross profit divided by sales into 100. Gross profit divided by sales, and I told you that day that the sales also include the interdepartmental transfers. So if you take gross profit by sales of X, so their gross profit is 1 lakh, so I'll write that down. Gross profit of X is 1 lakh, like we've already calculated. Now sales of X. Now when we take sales, we also include the interdepartmental transfers. Please remember that when we are taking sales, because we are talking about the total transfers, whether as sales or whether as transfer to other departments. Okay, so when we talk about sales, then we take the total transfers, like I explained also in the previous problem. So it will be 2,50,000 plus 50,000, which will be 3 lakhs. Okay, 2,50,000 plus 50,000, which will be 3 lakhs into 100. Now this 3 lakhs, mind you, some of you may confuse that I've taken this 3 lakhs. No, that 3 lakhs is 2 lakh 50 plus 50. I will just make a note about that 3 lakhs. How did I get that 3 lakhs? 3 lakhs is equal to, or 3 lakhs is 2,50,000. This is just for you to know so that when you're studying, you don't get confused. 3 lakhs is 2,50,000 plus 50,000. So if you do this calculation, you will get, if you do this calculation, you will get 33.33%. 33.33%. How do I get that? 1 lakh divided by 3 lakhs into 100. You can check it out. You get 33.33%. That means the element of profit is 33.33%. In the first problem that I had done like this, it was 25%. I think in the previous one, it was 10%, if I'm not mistaken. I think it was 10%. Here it is 33.33%. And now we can calculate our stock reserve. Our stock reserve is equal to, it will be how much of the stock in Y has come from X, because only that stock is valued at market price. The remaining stock is valued at cost. Okay, so out of 25,000, entire 25,000 has not come from X. In the previous problem, the entire stock of the second department was from the former department. But here, out of 25,000, only 9,000 has come from X. So we are going to calculate stock reserve only on 9,000. So stock reserve is equal to 9,000 into 33.33%, which is equal to, you get an amount of 3,000. Stock reserve is 3,000. Okay? And this stock reserve is shown in the general profit and loss. To stock reserve, 3,000. Now, if they told us a rate directly, that they'd given us a rate in the problem itself, it's at 33.33%, I would have directly gone to this step. But if they don't give the rate, we have an additional step like this. Is that clear? And now we can get our total. The total here is 1,62,600. 1,62,600. 1,62,600. The net profit is, overall net profit is 1,59,600. So this is the overall net profit.